The economy too will need the boost, according to the Reserve Bank Governor, Philip Lowe. He's given a speech today in which he's warned about the economic outlook.
The tax offsets for low and middle income earners announced in the recent budget will boost disposable income. And second, it's likely that we will return to a more normal relationship between growth in income and growth in taxes paid. And our expectation is that the stronger growth in household disposable income will flow through into household spending, but it's going to take some time for this to happen.
So the economy is going to need that spending. The economy may need even more spending. The economy may need more industrial relations reform as well, making it more flexible for businesses to hire and fire. Not that Josh Frydenberg signalled they'd take up that advice necessarily today. But the economy will also, and this is where the Reserve Bank comes in itself, will also need an interest rate cut. Now, you don't see this terribly often, but the Reserve Bank Governor has today flagged 2 weeks in advance where they're going ahead of the next board meeting.
A lower cash rate would help support employment growth, and it would bring forward the time when inflation is consistent with the target. Given this assessment, at our meeting in 2 weeks' time, we will consider the case for lower interest rates.
Well, let's bring in Chris Richardson from Deloitte Access Economics for his take on this. As mentioned, Chris, you don't see the Reserve Bank Governor terribly often waving the big flag 2 weeks before their board meeting. What did you make of that, and why is he doing that?
Well, they absolutely don't want this to be a surprise. They're trying to flag it as publicly and as carefully as they can. And it's part of a larger set of boosts to the Australian economy. We're hearing today an easing of the credit conditions around housing. We're hearing that an interest rate cut is in the bag in a matter of weeks. And although there's push and shove over those tax cuts, don't forget that roughly half of the refunds are already legislated. So we're pushing and shoving, if you like, over the top-up to the refunds announced in the budget.
That's a good point. You're right. The $530 has already been legislated, so that'll happen, we know. And then this is an extra $550 on top of that the government took to the election. So whether it's all in one go or in two bits, maybe a month or two apart, the message from the Reserve Bank Governor today was that the economy needs it, right? What was your impression of how he's seeing the economy right now?
Yeah, and look, he certainly wasn't hitting a big red panic button. But in essence, two things have changed. One, inflation, which has been very low, has, if anything, moved even lower. And the thing that the Reserve Bank said was, the final thing that it needed, unemployment's just gone up a little bit in the last couple of months. But it's against a backdrop of an economy that had pretty good results in 2017 and much of 2018. And although there is a slowdown, it's not a terribly large slowdown. For example, petrol prices have bounced back up. Inflation isn't perhaps quite as low as that latest reading has suggested. Although unemployment has edged up, remember that jobs themselves are still growing pretty happily. So, yes, extra assistance, but not an emergency stomp on the accelerator.
Here's the thing, though, Chris. Does an interest rate cut from where we are right now deliver the same bang as an interest rate cut normally does? There seems to be mixed views on this. What do you think?
Yeah, look, probably a little less. Remember that the main negative for the Australian economy is not the world economy. Things like coal and iron ore prices are actually up rather than down. The main negative for Australia is in and around housing. And that's got the Reserve Bank exercise, but it's got the average Australian exercise. We're being a little more careful in our shopping, which is the largest chunk of the economy, the spending by consumers. And the rather smaller chunk, 5 or 6% of the economy that is around housing construction, that's taking a bigger hit. The combination of those things are giving a degree of weakness in Australia. But again, not a huge degree of weakness, and the cavalry is appearing on all sorts of fronts. Those, the easing of housing regulations today, the interest rate cuts, the tax cuts, and maybe even an easing of uncertainty in housing markets, given that some policies, had we had a different government, we'd have had different policies.
Yeah, that's right. Labor's negative gearing plans aren't going to happen. So you're right to say the cavalry on a number of fronts is coming to the economy. So just on the housing prudential regulations that you touched on there. Just explain to us what happened on this today and what's it aimed at doing in the housing market.
Look, a few years ago, the financial regulators in Australia told the banks that one way or another they needed to plan they used two rules, but the combination effectively implied when you give somebody a loan, have in the back of your mind that interest rates may bounce back up to 7.25%. Well, today that rule has been removed. They're saying, yes, still leave a buffer in there over and above the current interest rate, but the buffer doesn't need to be as big. That makes it a little easier for people to get a loan, to get a mortgage, and on average those mortgages will be a little bigger than before. That combination should provide a bit of a boost to housing. Remember, housing bubbles are dangerous. We don't want to, if you like, reignite that housing bubble. But clearly they think that's not a danger at the moment.
Well, I guess it's not when you look at where the housing market is at, but if people are borrowing more or able to borrow more, perhaps they'll be taking on more debt as a result of that. Look, just finally, Chris, we did see the markets surge yesterday after the weekend election result. Has the return of the Morrison government been a positive for the economy, do you think?
Look, one side of politics or the other makes less of a difference for the economy than we tend to think. Other things equal, Labor was going to tax more and spend more. That combination might have meant slightly lower growth, but a fairer economy, the usual trade-off. The key, though, was that there was going to be a transition as the new policies came in. Would that be uncertain? Would that be a bit of a hit to the economy? Those transition risks have disappeared. We didn't change the government, and markets are happy with that.
Chris Richardson from Deloitte Access Economics, thanks very much for joining us this afternoon. Good to talk to you.